Britain also losing its AAA credit rating after S&P chose to downgrade the country following a second day of major stock market losses. Joining me right now is Rafferty Capital Markets Equity Research Analyst Dick Bove. Dick, good to see you. Thanks so much for joining us.
Thank you, Maria.
First, does the downgrade concern you? Really want to get to your thoughts on financials post this Brexit.
Well, I mean, basically, the U.S. financials, as opposed to the European banks, the U.S. banks actually benefit by what's gone on to this point. And most of the theories which argue that either that short-term interest rates are going to stay very low and that's going to hurt bank profits, or that there is some sort of systemic risk sitting in the banking industry are pretty much incorrect. In other words, if you would take a look at, go backwards before we go forward, if you would take a look at the year 2015, all you heard was that interest rates are too low, the economy is not growing rapidly enough, there's huge losses occurring as a result of the drop in energy prices, banks should be broken up, big banks can't be managed, and yet at the end of the year, at the end of 2015, the banking industry reported the highest pre-tax profits in its history, and four of the biggest earners in all companies in the United States were banks. J.P. Morgan actually earned more money than every company in the United States other than Apple. Wells Fargo was the fourth biggest earner, Citigroup was seventh, Bank of America was 10th. There was nothing that was said in 2015 about this industry which would have told you that that was going to happen.
Wow. That's a big number in terms of JPM. So in other words, it sounds like you're not as concerned as so many have been over the last couple of days. What is the impact then of the UK exiting the EU? We know that there are new regulations that need to be formed in the next 2 years. Do you expect the banks to be pulling employees out of the UK? What is the impact?
Well, they're not going to pull anybody out of the UK, because why should they? In other words, basically, if you think about the London markets, and I think the quote that you put on a few minutes ago was exactly correct. You've got tens of thousands of people who have intellectual capital that are sitting there that don't want to live in Zurich or Dublin or Frankfurt. You've got literally hundreds of billions of dollars that have been spent in technology over the years. You've got a legal system that was established to benefit trading in London, and people think that you're going to tear all that apart and throw it all around the world in places where they don't have the technology, they don't have the intellectual capital, and they don't have the legal systems. But I mean, I think there are two issues which are pounding the banks here. The first one is this theory that short-term interest rates are going to stay low for a long time, and therefore nobody knows how banks are going to make money. And the problem with that theory is that for the last 7 years, the effective federal funds rate has been under 25 basis points. In fact, for 2/3 of that period, the effective federal funds rate has been below 15 basis points.
Right.
And yet that has not stopped banks from showing bigger and bigger earnings every year, except one. So the net effect is this theory which argues that short-term interest rates drive bank earnings is simply dead wrong. But what drives bank earnings is loans.
So, Dick, investors are responding to something. If you look at the Wall Street Journal today, UniCredit, Barclays, Royal Bank of Scotland, Deutsche Bank, they're all more than 50% down on their 52-week highs. What is the market telling us about UK banks and European banks? What happens to them in the wake of this vote?
Yeah, well, the market is telling you that they don't have a clue as to how banks function. But anyway, the fact is that if you take a look at American banks, all right?
No, I want to talk about European banks.
Yeah, well, I'm not a European bank analyst. You've got to find one to talk about them.
Well, what about the U.S.
I'm an American bank analyst.
What about the
U.S. banks? All right, think about U.S. banks. In the last 5 years, they've added $3.3 trillion in deposits. $2 trillion of that has been put into either the federal funds or deposits to the Federal Reserve, or buying government-backed securities. $1.3 trillion of that was to make loans. So the net effect is you've built a banking industry in this country which has more stability, more liquidity, more capital than you've seen roughly in 45 years. And at the same time that that's happened, people are worried that there's some counterparty risk coming out of Europe, which basically is going to impact, the stability of the American banks. On Thursday,
But Dick, we're looking at Goldman Sachs right now. I just want to cut in. We're looking at in the pre-market, many of these U.S.-based banks are bouncing back ahead of the open here. People are going to start to say, oh, when do we buy? You know, the U.S. investor's been so nervous. Can you just talk specifically on where you think people should start to put their money to work if indeed we're starting to witness a turnaround here?
All right, take a look at Bank of America. Bank of America is selling at 50% of its expected book value for 2016. The company has $400 billion in securities, which they're going to get this massive windfall profit on because interest rates are declining. But beyond that, you know, the bank is in a situation where if interest rates keep dropping, there's going to be a huge refinance boom in mortgages, which will drive their revenue from mortgages up maybe 20 to 30% in the second quarter, and probably 100% if interest rates really go where people are talking about in the third quarter. Their loan volume is increasing fairly rapidly.
Wow.
They're in a situation, they've got more capital than any other company more equity than any other company in the United States. And this bank, which is considered to be rotten and beaten down, has made more money in 2015 than every company in the United States except 9, and 3 of the 9 are other banks. So
it sounds like you think all of this has been an overreaction, from negative interest rates and the impact there on the banks to the overreaction for Britain leaving the EU. I just want to point out that this Thursday we'll hear from the Federal Reserve, right, in terms of which banks can pay dividends and do buybacks. Real quick, Dick, who's best positioned when the Fed makes that announcement on Thursday?
Well, I mean, Bank of America's dividend, I expect, will double. Citigroup's dividend will go up. BB&T's dividend will grow up. The Fed may decide they want more capital in the banking industry, which I think obviously is a mistake. But the fact is that, you know, on Thursday of last week, you know, the Fed said that 33 banks, the biggest banks in the United States, could withstand a depression and still lend money. And yet on Friday, a whole bunch of traders said, you know, the systemic risk exists in the banking industry, and everybody decided the Federal Reserve and the FDIC know nothing about banks, and the traders know everything about them, and the stocks plummeted.
There you go.
If you got a dart, if you got a dart and a list of banks, throw a dart and buy whatever it hits.
Wow. All right, Dick. Real bullish today. Good to see you, sir. Thanks so much.
Thank you.
We'll talk with you soon. Dick Bove there. Real